everyone, it's Christine Wilson here at the mortgage firm. I wanted to share with you a little secret about primary residence. You know, the benefit of purchasing a home as a primary residence is that you get really good interest rates, the best interest rates out there as a primary residence, and you get the opportunity to put less money down. If you purchase a home as a second home or an investment property, second homes in Florida require 10% down, and investment properties are 20% down. Pretty much. You can do 15% down on investment property, but nobody does because the mortgage insurance is non-cancelable, and most people just go with 20% down. So, but recently, I have closed 2 deals where the children purchased the home for their parents, and they purchased it as a primary residence. So what that did was enable them to put down less money. So I want to go over, I have Fannie Mae guidelines right here on my other screen. So let me read to you real quick just to kind of clarify what I'm talking about here. So a principal residence is a property that the borrower occupies as his or her primary residence. The following table describes conditions under which Fannie Mae considers a residence to be a principal residence, even though the borrower will not be occupying the property. So this one, that's a key factor right there. You know, the first one is multiple borrowers, where you have one person, only one borrower needs to occupy and take title. You know, that's when we do non-occupying co-borrowers and things like that. But that's like 8% of what we do on a day-to-day basis. But there's 2 other scenarios where we can consider this as a primary residence. Number 1 is parents or legal guardians wanting to provide housing for their physically handicapped or developmentally disabled adult child. If the child is unable to work or does not have sufficient income to qualify for a mortgage on his or her own, the parent or legal guardian is considered the owner occupant, which allows them to put down less money and get still great interest rates. Number 2 is which in this scenario is what I've closed 2 of them, and I think in Florida this is huge. We see this a lot with children wanting to provide housing for their parents, but they've been told by banks that they have to put down 20% when they don't have to. They have to, considering it as an investment property. So listen to this. Children wanting to provide housing for their parents. If the parent is unable to work or does not have sufficient income to qualify for a mortgage on his or her own, the child is considered the owner occupant. So the last 2 that I've closed, April lived up in Oregon, and she wanted to purchase a home for her mom down here, and so she did. She qualified with both mortgage payments counted against her, and she did 5% down and it was a primary residence. So. And then the second one, a couple wanted to, their parents weren't able to work and they got limited income, but they were going to help them out with the mortgage payment. And so we were able to do it as a primary resident. And they came to me from a bank who was making them do 20% down as an investment property, and you just don't have to. So if you have any questions about it, please don't hesitate to give me a call, 321-972-9421, or email me at teamwilson@tmf.mortgage. Thank you so much. Have a great day. Bye.